Hey guys, Dylan Weston here. Today in this video, I'm going to give you a bit of an insight into my current thought process with the market dip and Russia and all of that. So first of all, if it is your first time going through a dip, it is tough. There is no worse feeling than seeing your hard-earned money vanish before your eyes. But what we need to do is just understand that this is all temporary. Eventually, the market does return, and there's a lot of lessons to be learned here. So, like in 2020, as the market was pumping in 2021, we have that fear of missing out as the market goes higher and higher and higher and higher. But that, if we think about it, that isn't really rational having that fear of missing out because we're buying in at higher and higher prices. But now we're experiencing market dip. It's actually like something is becoming on sale and the sale is getting bigger and bigger and bigger. If you're thinking about some sort of material good, like buying a shirt or something, you might have a standard discount for 25%. And then after Christmas, when you got Boxing Day sale, it might be a 50% discount. So obviously the 50% discount is better than the 25% discount. So that's currently like what's happening in the market. So what happens with the stock market is it transfers the wealth from the people that aren't prepared and are thinking short-term minded, and they are not brave, to the people that are brave, the people that are thinking long term, and the people that have the knowledge and are prepared. So it happens again and again and again and again. So main thing is just need to stay rational, hold through the dip, and keep on buying and following the strategy. Now let's talk about the current market dip, and let's say with Russia. So first of all, I've been getting a lot of questions like, what's my current thoughts on Russia and all of this stuff? But what I need to say is, I'm not going to lie to you. I don't really have an opinion on Russia. Like in terms of geopolitical events, like I'm not an expert. So I really can't give you a proper answer, but I'm going to give you my thought process. And the whole idea and the point of today's video is we don't always need to have an opinion. Like as investors, you cannot be an expert on every single event that happens throughout your life. Like just recently with COVID, who actually was an expert on viruses and how these things spread and vaccines and all of this stuff? And then you got to do the game theory to understand how will the politicians react to this news and all of that. Like at the end of the day, no one really knew what was happening. So I think that's similar to what is happening today. And if you think about it, like in terms of just like a top-down approach, in terms of what happened during COVID, it was a worldwide global event, which led to lockdowns, as we know, and all of this stuff. It really did hurt the economy, and for many years. Now with this, are we thinking it's as bad as that? Yes or no? I'm not sure. I would lean towards it's not as serious as COVID. I think COVID was a lot more serious. And what we need to understand is, I'll bring you onto the charts right now. So if we're looking at the S&P 500, and in hindsight, this big dip here in March 2020, this was the COVID crash. And obviously in hindsight, this was such a great buying opportunity because if you're fortunate enough to buy somewhere near the bottom with the S&P, you'll be up like roughly 90%. So you would have made a lot of money during that time. But the thing is, with this big red candle, this big week where the market had dropped quite a lot, if we measure it, it dropped about 10, 11% in just a single week. This is the week where the market had finally realized, oh shit, this COVID thing, it's going to be a problem, right? So this is kind of similar to what is happening right now with the current stock market. If we look, the market is down roughly the same with the S&P 500 down about 12% or so. NASDAQ down more, which has a lot of the technology stocks, down like I think roughly 20%, if I can remember correctly. So now we might be thinking, oh, this rising interest rates and Russia and all of these other things, they might be a problem. But let's just say here, when we started to understand that COVID was going to be an issue, in hindsight, that was a pretty damn good buying opportunity as well. Like anyone who had bought on that side, they had still made like 35% until today in the current dip, and at the previous high, up 55% on their money in just a couple years. So that was fine. Now, if something were to happen that's similar, We might be, say, halfway through the dip and might go in a little bit further down. But eventually one day, and I'm not sure exactly when, but the world will get over this event and the world will keep on progressing. And it's probably going to be turn out to be actually a really great buying opportunity. So the only way to really make money off the last dip was you couldn't wait for the bottom because no one knows exactly when the bottom's going to come in. All you could have done was just dollar cost average and keep buying as frequently as possible as it went down. That's all you can do. And then as it went back up, keep on dollar cost averaging higher and higher and higher. But one of my big lessons as well is understanding the story of a chart. So a lot of the time when I'm trying to teach people in terms of investing in the market and holding for the long term, it all looks great when we zoom out. And you can just say, hey, the market moves in a nice zigzag pattern, keeps on going higher and higher and higher and higher. But what does it actually feel like during the dip? Not many people have what it takes to follow the strategy of dollar cost averaging and keep buying throughout the dip as it heads lower. Everybody loves buying as the price goes up, but all we're actually doing when that's happening is averaging our average buy price higher and higher. For the strategy to work, we need to stick with it and hold throughout the dips. So going back to where we were with COVID, let's zoom in. Like I was saying, on this candle, that's when we started to realize, oh no, COVID's going to be an issue. And we went down a whole lot more. That could be happening right now. Let's see how far we go. I'm not sure exactly how far we're going to go. But same as where was like COVID low was a great buying opportunity. Where was another great buying opportunity in hindsight was the 2008 financial crisis. If you had bought in at the low today, you would be up many, many, many times on your money. So you'll be up like 500% to the previous high. Now, imagine here, when the market started to roll over and everybody like on that first 10 to 20% correction, all right, around this area, so around 10 to 20%, this is when people realize, oh no, we're in a financial crisis and it seems like the stock market's going to really roll over. In hindsight, if you had bought here, or in the moment, if you had bought here, people will call you crazy. People, because that's the environment you're in. You're in a bear market and the market is supposed to be going down. But in hindsight, whoever was brave and bought in through here and averaged down, those are the ones that made money, the ones that could hold through it. So my point of today is Russia, rising interest rates and all of that stuff. For me, it doesn't really matter. Why? Because my time horizon is much more than 5 years. Like if you go and look at any 5-year period and you dollar cost average through it, generally speaking, it results in money made. And if you go further out to 10 years, it's even more profit that you can make. So it's not about timing the market, finding out when to enter. It's about time in the market. How long are you in the market for and how long are you holding for? So right now is actually a great time to be buying in, just like COVID was a great time to be buying in, just like 2008 financial crisis was a great time to be buying in. The only thing that we need to consider is we don't want to invest too much money, that especially if we have like some sort of event coming up in our life, like we're buying a car or, might have a wedding or something like that, where we need to spend a whole heap of money. You don't want to invest all your money up here when you have this big event coming, because if you need to sell your stocks down at this cheaper price to get that cash to cover that event, then that's when you get yourself in a bit of a pickle. So you really don't want to have that happen. If you're saving up for an event like that, it's probably just better to save the cash. And yeah, try not to like just time the market. So yeah, I think it's better to think like that. So yeah, that's practically my thoughts on Russia, the rising interest rates, and where we currently are in the market. I think we can still go quite a bit lower, but who knows when it's going to return back. And the thing is, the reason why you need to stay invested is because near the bottom is some of the best, most bullish price action that you can get. So like, see here from the bottom, these are weekly candles. So that's 1 week, 2 weeks, 3 weeks, 4 weeks. Within a month, you'd already gained back 32%. So my hunch is it's going to be probably similar this time. It might take a few months to get down or a few weeks to get down, but within 1 month, you could be back again. And it's like you've wiped out any of the losses you had. And if you've been buying down, those buys would actually be in a profit as it rises higher. So that's kind of my thought process with the market right now. I'll be very careful of if you're following some sort of influencer or someone on YouTube and they have an opinion on the market and they came off as an expert during COVID, and now they're coming off as an expert during rising interest rates and what's going on in Russia. Like, you got to ask yourself, were they an expert on viruses? Did they understand all of that biology and all of that stuff, science? Then with rising interest rates, do they understand economics and all of that? And then with Russia, do they understand everything that's happening geopolitically? Like, I would argue it's actually almost impossible to be an expert at all three. So yeah, just be careful. If you see, like I see all the time on YouTube, and then you got to be careful as well. People on YouTube, they are just like media sources where they are very clickbaity. Their business works by getting views. The more views they get, the more money they make. So they might make very clickbaity titles like, oh no, the stock market's going to crash. I just sold everything. Like, that's a very common one. It makes you want to click because it's selling out of fear. We have to be very careful of that. Now, what I would say is, like, with the overall S&P 500, how far can it go down? It can go a little bit more. I would say base case for me, based on what we see today, and I can change this in a heartbeat, but I would say, yeah, we might drop we might be only halfway through the dip. We could go a little bit further. With the NASDAQ as well, the overall NASDAQ may be the same as well. We've already down 20%. Would we get another 20% to be down 40? Possibly. What was the COVID correction? When COVID hit, we only fell 30. So, we fell only 30 with COVID, and then within a couple of weeks, we're already back at the highs. So can we fall 40% with NASDAQ? Maybe. I doubt it though, but it could happen. And then if you think about what's happening with Cathie Wood and her ARK Invest. So ARK Invest, what it is it's an ETF, which is like a big bucket of innovation companies. So these were all the high flyers during 2020. So, she made a lot of money during 2020. So practically the price action it was consolidating since 2018. In 2020, it broke out and it ran all this way. Now, these stocks, which are the Zooms of the world and all of these famous names, anything that was pumping, these smaller technology companies, they're down 62%. And practically, they're back at the breakout level. Now, this for me can potentially be an indicator for understanding what the dumb money is doing. What is the retail doing? The people that are inexperienced, because they were jumping on this train and following the hype and following the FOMO. They were averaging their buy price up higher and higher and higher and higher. Just like if you see in my last market update or the last video on this channel, when I was talking about the different emotions that people experience during the market cycle. As it goes up, people buy in at bigger and bigger prices. So the average buy price will be up here near the top. Now, what is happening is, as the price has gone below their buy orders and below their average buy price, then they're practically forced to sell because they get scared. And now pretty much everything has been wiped out since the breakout level. And now that we're roughly near the breakout level and we've fallen by, more 62% or so, you got to ask yourself, are we closer to the top? Or are we probably closer to the bottom? So if we're just thinking very simply like that, I would say it definitely seems like we're much closer to the bottom. And with my knowledge about these companies, it seems like coronavirus really helped them. It helped them become more profitable. So before coronavirus, the price was back at this level, around $62. They seem to gain from coronavirus. And now A couple years later, we're back at the same price. So I would argue it's probably a better buy today than it was back at the beginning of 2020. So yeah, none of this stuff is financial advice. You've got to always do your own research, but this is how, I'm practically just thinking out aloud here. This is how I currently see the market. And sorry, one more thing that I forgot to mention. I was just watching The Compound here, a YouTube channel. I highly recommend it. But what they were showing was every time there was an invasion, so like the Vietnam War, the Gulf War, the Afghanistan War, and all of that, it had been roughly near the bottom of the stock market. So the stock market, it moves in a very mysterious way where it's predicting what is happening and adjusting for it based on like 6 months out. So whatever this event could do, it's already pricing it in. So that is something to keep in mind as well. Because this event of Russia and the rising interest rates been known for a very long time, there is a chance it's already priced in and we're closer to the bottom than we expect. So yeah, that's pretty much everything for today's market update. If you got any questions, welcome post them below and I'll get back to you on that one. Anyway, guys, stay safe out there. This is a tough environment to be investing in. So don't kick yourself in the ass if you're losing some money. Not many people are going to be making money at this time. And it's just how it is. The stock market ebbs and flows. Sometimes it's really easy. Sometimes it's really hard, like now. But eventually, if we play the long-term game, it's eventually going to come back.